I think now that the OTC market's starting to warm up, I believe the traditional markets will follow. How long or when, I'm not sure. It could be, a few months. It could be a few years. But when the OTC is doing well, traditional markets tend to do well also.
On this episode of Early Bird, Alan Ibarra, CEO and creator of Toilet Paper Hands. Alan joins the podcast today to talk about under-the-radar electric vehicle stocks, including a look at the current state of where the EV sector stands in 2022. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Alan, welcome to the Early Bird podcast. How are you doing today?
Great, Stephen. How are you doing today?
I'm doing well, thank you. Today, I'm excited. We're talking about under-the-radar electric vehicle stocks. But before that, Alan, tell the audience a little bit about yourself. Well, what should people know about you and your background? If you could give us a quick 30-second Reader Digest on your background, where you are now, I think that would be great.
I know, I appreciate it for sure, Stephen. Well, I've been investing in penny stocks, over-the-counter stocks for the last 20 years or so. Currently I'm working on a project called Toilet Paper Hands to kind of help financial literacy and investments and blockchain. And currently it's made for, high school kids to young adults to get them financially literate, and then for them to start taking on the challenges of investing and finding these gems that we're going to discuss today.
Cool. Well, I think that's a wonderful thing that you're working on there, Toilet Paper Hands. Definitely check it out. The address, just so people know, Alan, is what?
Toiletpaperhands.com.
Toiletpaperhands.com. Easy to remember. Check it out. It's a wonderful website, definitely with the involvement in financial literacy. Alan, we're talking about under-the-radar EV stocks today on the program. Before we kind of get into that subject, under the radar, what do you kind of define as under the radar? Are you talking about penny stocks, or is it something bigger than just that?
Well, typically now with so much information out there, I talk about penny stocks for the sake that they give you liquidity. I know there's a lot of equity crowdfunding now where you can get into some of these early technology stocks, but they just don't provide any liquidity until they go public. So the OTC market, it allows companies to go public quicker. It allows shells, which are pretty much pretty much the company. Sometimes they lose their business or the startup failed, but the shell stays alive since it's already a publicly traded company. And then typically other companies that are looking to get to the market quicker and sooner, they'll reverse merge into these shells. And I consider these under the radar for the sake that maybe the company is known, but nobody knows the actual ticker or the stock that they're going to reverse merge into. So once that news starts becoming public by filings, then you do have a herd of us in the OTC market that start looking for these filings, start trying to analyze who could possibly be into these, who could be the bigger company that's supporting these filings. So that's what I would consider under the radar.
Nice. And penny stocks. So, certainly there are benefits to penny stocks for a lot of traders out there, especially traders who know what they're doing. I always say reach out to a financial advisor, especially if you're new in that space. But certainly they come with risk, penny stocks. There are a lot of pump and dump schemes. There are scams out there. How do you reckon with that?
Typically, that's kind of what Toilet Paper Hands it's about. It's about just doing the basics, right? Where it's difficult to invest in any sector, right? You're going against algorithms. You're going against the Aladdin from BlackRock. You're going against just computers, and the only way I can kind of advise people, or I can't advise. I'm sorry, I'm not a financial advisor. The only thing I could probably suggest is do your due diligence, understand what you're getting into. do as much research and understanding of the company as possible. And that means looking at their filings, looking to see if there's any convertible notes, look who's backing them, look at their track record. And then ultimately, you got to look at the chart to find a good entry level where the risk is less.
Those are definitely some good considerations. As someone who likes those under the radar stocks, those penny stocks, there are so many different industries that you could target. Why is the electric vehicle industry one of those sectors that you are honing in on right now?
Personally, it's not my preferred sector. It's the momentum that the market has right now in the OTC. Typically, depending on the sector, I try to stick myself into technology, patents, shells, empty shells that a larger company can come reverse into that has a good share structure, doesn't have any notes or any debts. Something that's clean for the sake that it's cheaper, it's quicker of a vehicle for these private companies to go public to. And I know a lot of the SPAC plays have been really popular these last few years on Wall Street, or on the bigger exchanges like NASDAQ. And people are finally starting to hone in that the OTC market this is kind of what the bread and butter is. That's what they've been around for since I've been investing the last few decades. And now traditional investors are starting to see more of a how should I say it, possibilities of greater returns, trying to get them earlier, trying to get in quicker into these under the radar plays.
I get it. So these are stocks that you're targeting that maybe others are not. Looking at sort of the bigger picture, it's been a rough year for electric vehicle stocks, many stocks in other industries as well, but in particular EV stocks. A lot of the big names, Teslas, Rivian, NIO, all down year to date and down by a lot. What do you make of the EV sector in 2022?
Well, it's still got to find its niche, right? Like any sector that booms, there's always a little bit of a bust or a pullback, a correction. And then this is the time to go find these undervalued assets. Personally, it's hard for me to look at Tesla and see value for the sake of their, price per earnings is astonishing. I see better value than buying into Tesla. But that being said, people tend to, some stocks become cult stock where no matter what happens, people buy it and people continue to buy it. Apple, Tesla, you get the, what should I say, the FANG, when it was Facebook, Netflix, that they've kind of broken apart a little, but you still get these cult stocks. And that's kind of one of the ones that we're going to be talking about today in the OTC, where it's starting to get a really good following and the momentum's there. It has all the players. It checks, the list checks off quite a bit. And it makes one of those intriguing plays to follow, to be part of. And these things just go on some, gigantic returns, and we're talking about, 1,000, 5,000% returns on some of these over the counter plays. Once all the check marks are there and it gets that type of a cult following, and everyone understands that, we got to get rid of gas ultimately, and these cars can run on electricity. Now, one of the reasons I believe that they're down is because of lithium. There's just not enough mining in order to produce enough batteries for these cars that they're projecting. So the companies that I like in this sector are the ones that are using something besides lithium in order to power their vehicles.
Interesting. Cold stocks. I do like that concept. And then I like the fact that you're looking at stocks that are beyond lithium. That's a major macro issue that a lot of investors may not be aware of. So I guess if you're an investor looking at the EV space, you would always say, look at the under the radars instead of the big names. Is that because of lithium, or are there other reasons besides that?
Well, typically, the bigger names, obviously, they have bigger backings and historically have done pretty well in performance wise. But when the numbers don't add up, right, I'm truly a fundamentalist at heart. If the fundamentals don't line up, it's difficult for me to really buy into it and kind of float on that price per earnings, because I feel that's the number that can get manipulated up or down, and it's so easy to, if all of a sudden you go from, let's say, a Tesla at 1,000 times price per earnings that it's trading at, it could go down to 600 and it's still to me overpriced. So it's such that's the number that kind of sticks in my mind in terms of value. And a lot of these EVs, they're currently not generating enough income currently, since it's a new sector. It kind of reminds me of the 3D printing, right? When you're around for so long, you start seeing these bubbles and you start seeing these new technologies that are game changers. No doubt. The technology is going to be around for quite a bit of time. It's well needed, but the fundamentals of the business aren't there yet. They still have to supply issues. You still have to, manufacture. You still have to, make sure that the complete business model doesn't have any flaws. And in this time and age, we're having supply issues all over the place. So to see which one of these companies can come out ahead and be that competitor to Tesla, most likely it's going to be one of the big boys. They're going to come in and most likely buy some of these smaller EV companies that have the backing, that have the technology and then have the margins. It always comes down to, who's making money. And if these companies aren't making money, I'm not really interested myself.
Good observation. When we return, we'll hear from Alan about his favorite under-the-radar EV stock and advice for investors. But first, let me tell you where you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Alan, today we're talking about under-the-radar EV stocks. We talked a bit about some of the big trends in the space already. What are some of your favorite stocks that are under the radar and in the electric vehicle space?
Like I said, to be honest, it's the one I'm really following right now is GEGI. It's in the OTC. They're looking to complete a merger. They brought in some EV specialists that are part of are some of the directors. They have a logistics CEO that they brought on board, and it's the one that's getting the momentum in the OTC right now, where everyone's checking off the boxes on their management, on their directors, the connections, the relationships they have. They're cleaning up the company, getting rid of the debt, getting everything properly structured in order for them to merge into some of these players. Who's going to land there? We're not sure yet. But it's really intriguing to, kind of follow along the story. And this is the journey I enjoy in the OTC is there's always a great story out there, but you need to, get out of that fiction world sometimes and not really follow the story, but you got to look at the filings. What filings are they putting out there to the OTC markets? What are they making public? So that way there's not as much rumor associated with it. There's actually some type of reality to what's occurring. And then they kind of grow up into these, possibly huge monster plays in the OTC where, they just kind of blow you away of what they can actually accomplish. So that's the one I'm really enjoying right now, watching in the OTC. Some of the others are there hasn't been too many shells. There hasn't been too many OTC plays that are landing any of these big companies like Raven or Lucid. Those tend to be going into the NASDAQ markets and getting the bigger funding. So I'm just watching GEGI right now.
GEGI, that seems to be an interesting one, right? That's the thesis that you have for it, and it's over the counter, right?
Yeah, correct. That's the one that's getting all the love on Twitter. It's getting talked about in the chats. And the OTC market's been down for this last, I'd say almost a year, almost 13 months. So it's really nice to see some momentum finally start coming into the market. And the way I view that is, no matter what happens in the traditional markets, the Dow Jones and NASDAQ, it could fall off the cliff, but investors are still buying into the OTCs. And I usually consider that being, it's subjective. It's kind of, predicting what's going to happen in the next, 1 to 2 years. So it's speculative, right?
Hmm.
So as the OTC market starts getting its momentum, it's usually because we're going to start turning the cycle and we're going into a boom. And traditional markets will kind of follow. And likewise, when the OTC market slows down, it's usually because the next 1 or 2 years it's going to be a downtime for traditional markets like it has been. So it's kind of I'd say a little a signal for to what's going to be coming in the future to the economy. When right now people tend to be a little bearish or uncertain about what's going to be happening because of what's happened to the tech sector this year. I'm the opposite. I think now that the OTC market's starting to warm up, I believe the traditional markets will follow. How long or when? I'm not sure. It could be a few months. It could be a few years. But when the OTC is doing well, traditional markets tend to do well also.
That's very bullish. So the company GEGI, that's the ticker. We're talking about Genesis Electronics, right?
Yes, sir.
How long of a horizon are you looking at as an investor? Are we talking about 6 months, a year, or longer than that?
Yeah, I've held some plays for years. For the sake that it takes that much time for them to accomplish their roadmap, their business plan. It's like receiving a pitch deck when you're going into these equity crowdfundings, where it just takes years for the company to execute and for you to reach that full potential of market cap of value. With this stock, I'm currently planning on holding until the merger is announced. Depending on the merger, then I'll kind of pivot and decide on how long will this merger take to close. Is this company already generating revenue, or is it a startup? Again, and figure out the relationship that business has, and kind of figure that out later. Right now, it's a hold until they announce the name. So it's almost like Christmas, right? Uh, and once they give us our present, then we have to reevaluate it and figure like, okay, do we take profits now? Which I'm sure I will. We'll skim some off the top and take some profits, get our money back, and then see if we want to allow the rest to roll.
And for those new investors, retail investors out there, new traders who are brand new to the stock market, if they're interested in these under the radar EV stocks, what advice would you give them, especially if they want to get started in that space?
Typically, just do your due diligence. Like anything, it takes a lot of work to know what to look for. It all starts with understanding filings. Looking through quarters, looking through financial statements, and just picking out what might become a problem. Are they carrying debt? Are they not? And then ultimately, same thing with once they actually find the company. Depending on the company, you'd have to research it, see who's their investors, who their backers. I kind of consider it like pharmaceuticals, where when I first got into this industry, you kind of get into the pharmaceutical side of the business because there's always that new drug, there's always that hype, and there's always that, oh, they're going to cure cancer, that dream. And because of that dream, investors tend to buy into it, right? Because you're new, you're naive, you're hearing good things about it. But ultimately, a lot of these companies don't have enough money to get through the FDA approval process. So they're going to have to sell shares. They're going to have to continue to sell shares. And not every company can do it like Tesla, where Tesla was able to sell shares and continue the rise in market price. So that tends to be the biggest problem in any market, right? But more in the OTC, because these companies are going public for a reason. Are they going public? And they usually want to go public in order to get access to capital markets. But then that can really hurt you as an investor if you're too lackadaisical in your research, you're too lackadaisical in doing your homework after, because you find the play, you do your due diligence, you think it's a winner, but then you have to stay on top of it to make sure that it continues to grow. You got to water it, you got to pay attention to it, you got to stay up to date on what's occurring and what's occurring in that space, because these things work in sectors. If the sector's down, and it keeps going down, and that's where your stock is, unfortunately you're most likely going to ride that down also with it. There's very few unicorns that can go against the trend in the sector. And this comes from decades of being in the penny world. I've seen, like I said, I'm sorry, was it the 3D we're discussing,
Hmm.
where 3D modeling came out, right? It was so hot. things were booming, and then it went to bust. The .com years, right?
Yeah.
I was a little young in those years, but typically there's very few unicorns that can power through that and continue to provide you a good return. It's a good time to take that cash, put it on the sidelines, and wait for a better entry point, or find a better stock that can actually generate the revenue and has that cult-like following.
Good point. These are definitely some good considerations for investors who are new in that space. Alan, thank you so much for coming on the Early Bird podcast today, talking about under the radar EV stocks. Before we wrap up our discussion, I just have one final question, and it's the big question for today's discussion. That question for you, Alan, is what's your favorite seat on an airplane?
The one next to the window.
Any aisle?
Any aisle, yeah.
Cool. Thank you again to Alan Ibarra for sharing your insights on EV stocks. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.